Okay, I think the YouTube is good to go now. Okay, so on Wednesday we talk about audit related services. There we discuss extensively on sorry, I don't know if you are seeing my screen. I just want to forward all this thing to. Okay, let me just proceed here. Okay, so we discuss about audit related services. There we discuss extensively what are the things that we can actually audited after financial statements, and we talk about the element of audit related services, which there are mainly three. We talk about uh, uh, review of data, which is very, very important. Under review of data, we said we have two elements of review of data, which of course we talk about attestation and direct reporting. And we'll also discuss the other elements under review of data, which is due diligence. I'm sure by now everybody should be able to explain to within our context of audit and assurance what due diligence is all about. And we talk about the aspect of which other one? Agree upon procedure, which is other parts of audit related services. Then we also talk about compilation. Then after compilation, we talk about the bankruptcy and the likes, the meaning of bankruptcy, liquidation, winding up, and dissolution of an organization. And we discuss at length all these things, and everybody confirm that they understand. We also talk about investigations, the stages of the investigation, the difference between investigation and a statutory audits. So everything is there, and we have explained to some extent and to substantiate to ourselves that we can now write anything on chapter 11. I can't bring question on it. We are going to deal with it. So today we are moving on to assurance services. What are we talking about today? What is assurance services? That services that we can provide as an auditor that will increase the level of confidence of the shareholders on the information prepared and presented by another person. So this is where assurance services comes in to play. Assurance services is that engagement given to the practitioner, which is us, the auditor or the accountant, by the principal. Who is not the principal here? The owner of the company, the shareholder, they are the principal here. They give us the engagement that, oh, Mr. Idris, please come and give us assurance services on the information prepared by the agent or the management. Who is the agent here? Agent can be that accountant that the organization hire outside, or the in-house accountant that the management have. So the shareholders, which is the principal, reach out to me. I'm the practitioner, the auditor, that Mr. Idris, please come and give us assurance services on this financial statement prepared by the agent or the management. The reason why they involve me as a practitioner is to boost their level of confidence on the information provided. What is that information? The financial statement. Whether it is of true and fair view and it is free from material misstatement. That is why they call me as a practitioner to come and give them assurance services on whether that information presented to them, or whether that information presented to the shareholder. I talk about the agent and the principal and the agent here. We talk about the principal to be the owner of the company, the shareholder, where the agent can be the accountant, the organization hire outside, or the in-house accountant. So they call me to come and give them assurance services, to come and boost their level of confidence, whether the information presented to them by the management or the agent is free from material misstatement. That is where assurance services comes into play. Please, are we following? I want to give us the overview of this whole chapter before we dive in. Please, are you following me, everybody? All right. So after you have understand the meaning of assurance services, what it stands to be, and how can assurance services be linked to audit and assurance engagement, then of course after all the whole work, you are going to present a report of the work you have done. We are also going to examine the report on assurance service engagement. Then we also need to talk about the type of assurance engagement. Why are we doing assurance engagement? And what is the type? We have engagement relating to risk assessment. Yes. We have engagement relating to performance measurement to measure the performance of the organization. We also have engagement relating to value for money. How the resources that the principal, the resources they put in the business, how are we managing it as the management? They can do assurance services on that. And don't forget, when we are talking about engagement related to value for money, we are talking about the efficiency of the money the shareholder injects in the business, the economy, how they are able to use the resources effectively, and efficiency. What are the ways in which that resources are utilizing or producing or leading to profit? So that we can also do assurance engagement related to value for money on that 3 level, which is on economy, efficiency, and effectiveness. Also, we can also do assurance services on engagement related to system reliability. The organization's software, the CAT that we talk about in chapter 7, how organizations are being put it into use. We can also do assurance services on that. Then we can also do assurance services on e-commerce, electronic commerce, buying and selling of goods and services online. We can also do assurance services on that. Then we'll also discuss about the risk associated with e-commerce. We are also coming to that. Then we'll talk about under here. We talk about how to audit e-commerce transaction. That is the transaction that involve buying and selling online. How do we audit them? We are going to discuss about it in this chapter. Then continuous audit. What is continuous audit? Continuous audit on that the audit of financial statements on particular subject matter that require the auditor to be giving assurance on a continuous basis. And by that, we are going to also examine to perfect continuous audit. Then practitioner must be able to use effectively the software that the organization is using. So instead of that software will help the practitioner to be generating reports on a concurrent basis at regular interval. That's what we call continuous audit. We are going to talk about it in this chapter. Then we are going to explain, for those of you that have been storming my DM, that why is it that forensic is not in this chapter, but they changed the name to advanced audit and assurance and forensic. So why is it not forensic? Why is it not come to play in this chapter? In this whole advanced audit and assurance, it is under this chapter. We are going to explain briefly what is forensic accounting, what is forensic audit, what is forensic investigation. Then one key matter that used to come out in every exam, if they want to ask questions very well, if they want to be mean, if they want to be wicked, under this chapter, the main area under this chapter that if I can want to be very, very mean, they will ask question is on prospective financial information, PFI. What is prospective financial information? It is that audit that involves historical events, things that have happened in the past. How do we project for it in our audit? And what are the ways we can project for it? We can project for it. We can project for information. We can project for forecast, and we can project for the projection itself on everything will now be on PFI on projection, PFI on information, PFI on forecast. Everything we are going to discuss under this chapter. And of course, we are going to also discuss the international standard on assurance engagement 3400 on the examination of prospective financial information. So let us sit back and enjoy the class. I am your regular host, Olatunji. So let us proceed. At every point, please, if you do not understand me, please let me know. And for those of us that used to unmute our mic anyhow, please let us not stop the class today so that we can quickly round up the class and finish in time so that everybody can enjoy their weekend. I don't want us to delay ourselves today. So hopefully by 6:30, 6:35 marks, we should be out of this class. So this is what I need from you. Please don't let us disturb the class. And if you have your question, please raise up your hand. I'm going to create a time where we can ask questions. And please, for those of you that you form the habit of giving me thumbs down, please don't let us try that today. So let us enjoy the class. Please confirm if you can hear me with your emoji, please. Everybody. All right. Let us proceed. The reason why I just give us the overview of this chapter so that we'll be able to move fast. And by that, we'll move to the next chapter by Wednesday. So chapter 14, which is most crazy chapter, we need to use 2 sections for it, which is on next Friday, May God Spare Our Life, and Upper Wednesday. So after that, you can now start preparing for how to write, which is also the most important part in this advanced audit and assurance. So let us proceed. This overview that I've given us, there's nothing other than that you need to know about this chapter. So let us be attentive and sit back to enjoy the class. So let us proceed. As we used to say, the content, the introduction, and available guidance, which is objective and nature of assurance engagement. The main type of assurance engagement, of course, I've already discussed with us. We have 5. Then prospective financial information, I've already explained to us what are prospective financial information, PFI on projection, PFI on forecast, PFI on information itself. Then forensic audit, forensic investigation, forensic accounting, we are going to examine that. So that is what we are going to be talking about under this chapter. So let us proceed the introduction. I've explained, and I'll be fast. The reason why I explained the whole chapter, the reason why I give us the overview is we can be able to move as fast as possible. So everything I'll be explaining, I'll just explain in a short form because I've already given us the overview of everything we shall be looking at in this chapter. So for us to also be moving along with each other, so there will not be any misunderstanding. So let us proceed. And for those of us watching on YouTube, so there's this time that if you subscribe to the YouTube channel, every information that we are posting, sometimes I just feel like posting anything, you get notification and be part of the class. And for those of us that we are joining on Google Meet here, please let us just subscribe for the YouTube channel so that every information, every posting. So on some Saturday, normally I used to be active and I used to post something. For those of us that used to for those of us that subscribe to YouTube channel, most of us used to reach out to me that they got a notification and they used to follow with the class. So I just feel like posting it on YouTube. So in case of any notification, if you subscribe to it, you'll be getting notification. So let us proceed. I've explained before the meaning of assurance engagement. What is the meaning of that assurance engagement? I said it is that engagement where the practitioner, who is the practitioner? Me, the auditor, all of us here, the auditor, the accountant, we are engaged by principal. I've explained that the principal is the shareholder, the owner of the organization, to give an opinion on information prepared. What is that information? The financial statements prepared by who? By the agent. That agent here can be the outsourced staff, the outsourced accountants that the organization have, all the management, all the in-house the accountants, all the in-house accountants. So we are called upon to give assurance, to give opinion on the information prepared by the agents or the management. What is now the objective? Why do we do assurance engagement? Is to obtain reasonable assurance or limited assurance as appropriate about whether subject matter, which is on information. What is subject matter here? The financial statement or the financial information is free from material misstatement. So in the exam, they can ask us, why do we need assurance engagement? Your option is to give the objective of assurance engagement is to obtain either reasonable assurance or limited assurance as appropriate about the subject matter, which is financial information, whether it is free from material misstatement. That is the objective. That is the reason for assurance engagement. That is the need for assurance engagement. So, my dear professional colleague, I know, I think as at this moment, we now understand, everybody, we now understand the meaning of assurance engagement, right? Do we understand perfectly? Yes. Can I proceed? Yes. Any
Yes, sir.
question?
Proceed.
No.
Yes, sir.
Are we enjoying the class? Yes.
Yes.
Can I proceed? Yes. Any question?
Yes,
No.
yes.
Okay. Okay, so let's go. Some people are laughing. Okay. And I told us that at every point of assurance engagement, we are going to give reports. We are going to give reports back to the principal. You know, it is the principal that engages us that, oh, Mr. Edis, come, oh, Apex, please come and give me assurance engagement. After our work, we still have to give reports to the what? To the principal, which is the shareholder. So, how is our assurance report going to look like? And that is the next thing we are going to be discussing now. So, reporting on assurance engagement. How do we report on assurance engagement? We can see here that the assurance engagement will include the following elements: the title, that is the subject matter we are asked to come and do. Is it on related audit services? Is it on due diligence? Is it on statutory audit? We are going to tackle it. The address of the what? The address of the company shall be included in our what? In our assurance engagement reporting. Identification of level of assurance. What is the level of assurance? Is it limited assurance or absolute assurance or no assurance? You are going to state it in your report. Subject matter of the report. What is that particular thing that you are doing assurance engagement on? Is it on information? Is it on projection? Is it on a forecast? You are going to what? You are going to put it in your report. Suitable criteria. What are the things that you put together in arriving at this what? In concluding your opinion before you now give report on that particular engagement. Now, any job limitation, what are the factors that pose the auditor not to be able to gather substantial evidence on which is going to base his report? If there's any job limitation, like anything that is limiting the auditor not to be able to gather substantial evidence, we are going to put it in our report. Identification and responsibility of the parties. We are going to explain the responsibility of the management here in our report, the responsibility of the what of the practitioner, which is the accountant or the auditor, as the case may be. We are going to include it in our report. Summary of the work performed. We are going to summarize the work we did in a summary form, like, oh, after everything, this is the summary of my work. I'm concluding that, or from the information gathered, this is my opinion on the said information I audited or I review. So, summary of work performed, we are going to put it there. Practitioner conclusion, we are going to now conclude. Is it free from material misstatements? It is not free from material misstatements. Is it fairly presented? It is not fairly presented. Is it prepared in accordance with regulatory requirements? Everything shall be included in our report. Then lastly, the date. I mean the date, not the data. The date of the date when we are giving the report, the name of the auditor, and the address of the auditor will be included in the assurance engagement report. Please, my dear professional colleague, can I proceed, please? Please confirm with your emoji. Do we have any question? No. Are we enjoying the class? Yes. Can I proceed? Okay, yes. So now, after we have understood perfectly the meaning of assurance engagement and the reporting elements of assurance engagement. So what are the type of assurance engagement? I've given all the type before. I said assurance engagement, it is five. I will list it so that you don't say, oh, our lecturer said this, even reading it from I know it. Number one, we have engagement relating to risk assessment. We can do assurance engagement on risk assessment. How do we assess risk on that particular organization work? It is number one, which is type of assurance engagement. Number two, engagement relating to performance measurement. How is the organization performing? Are they utilizing the resources very well? Are they utilizing the resources to give profit to the principal? We can do assurance engagement on that, which is on performance measurement. Number three, we can do assurance engagement on value for money. How is the resources, the money that the organization puts in the business, how are we managing it on economy, on efficiency and effectiveness? We can also do value assurance engagement for value for money. Number four, we can do assurance engagement on system reliability. The software we are using in the organization, how reliable are the software? Did they have backup? Did they have backup or cloud software? In the case of any issue on the software, can we still retrieve the software the information stored on the software? Can we retrieve it back? We can do assurance engagement on system reliability. And last one, engagement relating to e-commerce, transaction, buying and selling of goods and services electronically, online, without seeing the vendor or the customer physically. We can also do assurance engagement on that. So these are the five types of assurance engagement. So I've also give us the view of those five types of assurance engagement. So by the time we are explaining, you'll be getting along. Although I've already explained before, I'm still explaining again. Then I will still explain when we now get to the type. So please, can I proceed, everybody? You can see that I'm just taking the time, the class smoothly, and everybody is enjoying it. So let us go. Let us go. Now, we said number one, engagement relating to risk assessment. I've already explained. It's related to risk assessment. How can we assess the risk associated with organization business? You can do assurance engagement on that. So how do we start that one? It is very, very simple and easy to understand. So let's see. This is a system where organization evaluates its risk. Risk evaluation, management and monitoring is the responsibility of the management. However, the risk assurance and assessment is mainly carried out by the internal auditor, but can also be done by us, the external auditor. The external auditor may also adopt the risk-based approach that we discussed in chapter what? In chapter 6, yes. In chapter 6, risk-based approach, where he understands that the operation of its client, understand the operation of its client's business. Management may analyze the risk and consider the potential impact on the business and probability of its occurrence. The strategies that may be adopted by the management will be based on the occurrence probability and its impact. So, what are the probability and the impact? One, where risk occurrence probability and the impact is low, then management may accept the risk. Don't forget the risk probability that we discussed about that time, where we talk about the impact and the probability. Where we have the high impact and the low impact, then the high probability and the low probability. When we talk about that stage one, which means that the high impact and the high probability, that is the probability that the risk is going to happen is high, and if it is happen, it's going to have high impact. That's what they are talking about here. Then where risk occurrence probability is low but have high impact, the management may transfer the risk using insurance cover or put strong control to prevent what the occurrence. Then the third one, where the risk probability and impact is high, then the management may avoid such risk by not taking any business move. That is, if the probability is high and the impact is high, the management can just decide that they don't want to take the risk at all. We don't want to venture into this business. But where the probability is low and the impact is low, the management may accept such risk. But on the third hand, where the risk probability is low but the impact is high, then the management can take the risk, but they are going to manage the risk by using the insurance what service to cover for any issues that may arise from what taking such risk. These are the engagement relating to risk assessment as assurance engagement. That is, they said external auditor can also help the organization to what to do assurance engagement on risk what assessment. But before then, the auditor must have be able to understand the business organization environment and the risk that may be associated with such what business before you can now do assurance engagement on risk assessment. Do we understand, everybody? Can I proceed? Are we following? Yes. Can I proceed? Yes. Is everything going smoothly? Yes. Okay, let us go. Please indicate with your emoji, please. Hello. All right. So let's go. Engagement relating to performance measurement. How do we do assurance service on that? What is performance measurement? Is to know whether the objective incorporated or the objective conceptualized by the management at the beginning of financial year, whether they are able to achieve it at the end of that financial year. That is why we are doing assurance. Is everybody? Please confirm if you can hear me with your emoji. Okay. I know at some point you were not hearing me because of the network.
Yes, sir.
Okay. I know at some point you were not hearing me because of the network, but now I'm sure you can hear me now, right? Okay. So, performance engagement relating to performance measurement. That's what we want to discuss about now. So, and I've explained that the performance measurement, we are doing assurance engagement on how the objective conceptualized at the beginning of financial year, whether it is actualized at the end of financial year. That is why we are doing assurance engagement on that performance measurement. So let us go. Instead, performance measurement is a critical aspect of an organization. It helps to match the objective set with objective attempts, just like what I said. Performance is measured and compared with benchmark. Don't forget, I have discussed about benchmark before. Benchmark has to do with what we when we are talking about this thing in PM that time, standard and actual. The standard, what we set, the standard is the benchmark. The actual is what we are able to attain at the end of financial year. So then, performance is measured and compared with benchmark, such as target, budget, or result from what competitors. The personnel may engage to measure the performance of its client. To perform such engagement, the practitioner, which is us, we need to understand the performance measurement system in use, the access and how to evaluate it, and the last one, test of effectiveness of that operation if they are actually attainable. So these are the things we need to what be familiarized, we need to perform when we are we need to understand when we are asked to perform an engagement on performance measurement. It is just to check whether the benchmark or the objective conceptualized at the beginning of the financial year is actualized at the end of the financial year. So before a practitioner, which is us, before we can do engagement relating to performance engagement, we have to understand the performance measurement they are put in use. What are the things they set at the beginning of the year? Then how to assess and value it. Is it attainable? Is it reasonable? Then we have to test for that effectiveness of that operation. If that operation is effective to achieve that targeted objective at the end of financial year. So that is that about the engagement relating to performance measurement. Please, everybody, are we following, please? Can I proceed? Please confirm with your emoji, please. All right. Number 3, I said engagement relating to value for money. And I've explained. Someone asked me here last week. Was it? I don't know. I can't remember where the person asked me. I think it is this year in this general class when they said the question comes out in last year or some years back like that. They said uh, uh, they should explain on value for money audit. They gave them case study of a secondary school like that, which I explained. I can't remember. But let us go. Engagement related to value for money. Why are we doing this? Is to ensure that the resources put in the business by the principal, how are they utilizing it? Are they using it economically? Are they spending it rationally? Are they using it the way they're supposed to use it, or they are just they are just using the money anyhow? Efficiency. How are they using the resources to generate another profit for the what? For the principal? Effectiveness. It means that using that resources to achieve desired objective. What are desired objective? Is it to maximize profit, to minimize cost? We are going to examine these 3 things on value for money audit, which is on economy, efficiency, and effectiveness. So we can also do assurance engagement for value for money audit. Let us go. How can we do it? Value for money audit means using resources in the best way in order to achieve intended objective. These are 3 aspects to achieve value for money audit. Economy, it means spending money carefully and not paying more than necessary for resources. 2, efficiency, it means using resources in such a way that they produce greatest possible amount of output. It means getting more from the use of available resources. And effectiveness, it means using resources in such a way to achieve the desired objective. Efficiency is of little value unless output from the system is what the entity wish to achieve. So, however, economy is doing it cheaply, efficiency is doing it well, while effectiveness is doing it the right way. Do we understand, everybody? That is why this material is for you. It is very, very slick and and thorough for your exam. It is for you. Some people have not still gotten the material. It is for you to read and understand and get away from this wicked advanced audit and assurance. So let us go. Please confirm if you can hear me with your emoji, please. All right. Number 4.
Sorry,
Engaging.
of efficiency and economy.
I said, if you have a question, please raise up your hand. It is very, very important. I said it before we start the class. I mean, don't let us fight today. Who is asking the question? Please raise up your hand if you have a question. Raise up your hand if you have a question, please. Don't send the question in the chat box. All right. Since nobody is raising up his or her hand, so I assume that the person that talked now, maybe it's just a mistake. So let us go. Now, number 4, engagement relating to system reliability. I said we can do assurance engagement relating to system reliability. The organization software, the software we are using in the organization, either in the internal control or in the account department, How are they reliable? In the case of any operational disrupt, can we still recover all the information stored on the software? Yes, we can also use assurance engagement to check the system reliability. So let us go. As engagement relates to system reliability, this is where the entity use computer-based framework consistent to run its activities. The personnel may be engaged to give assurance on the effectiveness and secure operation of the computer system. Here, the accountant focus on identifying, evaluating, and testing control within the company information system. The personnel may use the computer assisted audit technique, which is CAT, to carry out that particular work. Lastly, engagement relating to e-commerce matter. E-commerce is the general theme that refers to trading electronically at distance between the buyer and the seller. Most e-commerce activities are carried out over internet, with customer buying goods or services through website or the company. Now, what are the risks associated with e-commerce? So these five we have explained, they are the types of assurance, and I'm sure by now, and I said it too, that nobody should discuss top this class. Why did you just unmute your mic now? Mrs. Okoma, why did you unmute now? You see this clip now. And I promise that I don't want to be angry today. I jump and pass. Anybody that will make me angry. So let me meet everybody. Since that person don't want to, just decide to spoil our class today. So these are the 5 types of assurance engagement. Let's list it together. An engagement relating to risk assessment. Yes, that's number 1. 2, engagement relating to performance measurement. That's number 2. Engagement relating to value for money audit. That's value for money. That's number 3. Engagement related to system reliability. And number 5, engagement relating to e-commerce matter. So after we have explained everything like this, and by now, substantially, we should be able to explain these different types of assurance engagement. And in the exam, it might not be like this. They might give you a case study whereby all these things will be generated from that case study, and you are going to explain in line with this. And as you are explaining, you are trying to link that answer to your scenario. So let us go. We have understand the 5 types of assurance engagement. The next thing is to understand the risk associated with e-commerce. What are the risks? The transaction integrity. That is, the transaction might not go through and they might delete you. Maybe or you even pay. The transaction went through and the customer you please to get the for most of us that are used to order things online like this. You order things, you are paid. Now you are receiving the day they say you receive the money or you did not see anything. These are transaction integrity. It's one of the risks associated with e-commerce. Security risk with online trading. Security risk maybe by the time they say you put your by the time they say you put your card detail and boom, they just capture your card detail and they start moving money from your account. Is also risk associated with e-commerce. Inappropriate accounting policy, which is risk legal. That is inappropriate accounting policy. Accounting policy is not been put in place, and the risk legal is probably you even buy something online, you not receive it, and they'll be telling you that who can you sue? You cannot sue anybody now because they tell, did you see the customer? No. Did you see the person you are buying from? No. So, and regulatory breakage risk, that is the risk the regulatory requirement is also at stake when you are also doing e-commerce transaction. Management responsibility for e-commerce is at least it is also the management responsibility for the e-commerce that the management can also fall in victim of that particular this thing. They can even pay transfer for the management, and you will have sent the goods. By the time you realize it like this, the money has already gone back to the buyer's account. So these are the risks associated with e-commerce. So after understanding that, what are the general approach that the management of the organization need to put in place in order to pose the risk of what of uh, e-commerce transaction? Number one, management should carry out risk assessment exercise on regular basis. They need to carry out the risk assessment on regular basis. Two, management should create an appropriate control environment whereby if transaction was not successful or the money did not hit the account, the transaction will not show successful. The management should also create an appropriate control environment to manage their transactions. The entity should also make appropriate use of internal audit function to obtain assurance. That is, where there is any issue, internal audit function is the best option for the management to use in uh, in all this matter for uh, e-commerce risk. Then number five, which is the entity should keep up to date backup copy. In the case of any issue, please always try and back up your transaction history for reference purpose. So these are the general approach that the management can put in place in e-commerce transaction. So after understanding this, how do we now, this thing relate to this risk and the approach relate to the management. So does it concern us, the auditor? It concerns us. It is when we are called to come and audit anything that relate to e-commerce transaction. So that is where it's relate to auditors. So that is what is going to bring us to e-commerce audit. How do we do e-commerce audit, and what is e-commerce audit? The approach to an e-commerce system should include the following elements. So if you want to audit e-commerce transaction, the auditor, we have to understand the following. What are these things? Number one, the auditor should decide whether to accept the engagement or not, because there's always issue on this particular aspect. Then the management will now decide whether to what whether to accept the engagement or not. So if the management have not decided to accept it, the next thing is to plan for the engagement. How do you plan for the e-commerce engagement? Is to what to ask for all the management responsibilities that are put in place, the checks that are put in place, the internal audit that is working on that particular transaction, the people in charge of getting the order, and the process of the ordering going out, and the process of confirming the transactions is on how that is what the auditor is going to plan on, and it is also part of the approach to put in place by the auditor when you want to audit for e-commerce transaction. Number three, the firm should obtain knowledge of its client business. Then number three, after your plan, you should also need to understand what is the business of the management. What are they doing? What are they selling online? Is it like all of us that used to get our phone online, or the gadgets we are using, our laptops and the likes? So we also need to understand, as the auditor, we need to understand the nature of the client business before we can commence on doing the audit for e-commerce transaction. Number four, the firm may also liaise with the internal auditor of the client if they have internal audit investigation. That is, the auditor can also rely on the information supplied to him by the internal audit of that particular organization. Number five, the firm should identify and evaluate the system risk. What are the risks associated with that particular e-commerce transaction, which is of course what we have listed before the approach we discussed with ourselves. Then number six rather, ascertain and evaluate the internal control and the control environment. We need to also ascertain and evaluate the internal control. Is the internal control working well? The information provided to us by the internal control, is it okay for us to commence our operation and to give opinion on such particular audit or subject matter? So these are the approach that we need to put in place by the practitioner when we are auditing for e-commerce transaction. Please, at this junction, everybody, do we understand? Is the class going on well? Are we enjoying the class? Yes. Do we have any question? No. Can I proceed? Yes. Okay. I need to understand that. I mentioned before, daily that will is it that you don't understand because now your emojis show someone that is shaking head that you do not understand. Who is that person? Do you understand? Do you have any question before we proceed at this junction? Any question? Okay, so he has corrected that. He has given me thumb up that, oh, you can continue. So the next thing is to talk about continuous audit. The reason why I'm happy with this chapter because I took my time. You see that 5-10 minutes that I used to give the overview of this chapter, and I make it easy, and we are now moving steady, steady, steady. Now, what is continuous audit? I've already explained before. This continuous audit is that process that allows the auditor to give opinion on said financial information concurrently at regular interval frequently. And how can you ensure that you are giving opinion on particular transaction at regular interval? Is the use of automated procedure. That automated procedure has to do with the link or the software that the organization is using, and it will help the auditor to be able to give opinion on said financial information or any engagement frequently at regular interval. So what the auditor just need to do is the technical skills to put in place and also small audit skills. Then you can be over your word that your continuous audit is intact, and so that is continuous audit, my dear professional colleague. So let us now read what we have in the notes that we understand the rule. Continuous audit. Continuous audit is a process which allows the auditor to give certain allow the auditor to give certain on subject matter. That is, you are sure or you give your opinion on subject matter concurrently or shortly after the occurrence of the event on which assurance is being given, and therefore giving assurance is more frequently by using automated procedure. That is, continuous audit is that that audit process or the type of audit whereby the auditor can give opinion, can give assurance opinion on subject matter concurrently or shortly after the event has occurred. He now said, how can you now give report or give assurance on particular information properly or immediately after the event occur? Is by what? Is by automated procedures, by using automated procedure. So continuous auditing require using automated procedure which are embedded in client system. It must have been uh, it must have been updated in the current business. So the auditor now require the technical skills and also the auditing skills to give assurance on that particular uh, subject matter by giving the opinion concurrently or shortly after the event has occurred. And how can we do that? Is by using automated procedure embedded in the client system base of that particular organization. So, my dear professional colleague, that is continuous auditing, no more, no less. Can I proceed, please? Do we understand, everybody? Yes, let me see your emoji. Can we proceed, everybody? Yes, you can proceed. Are you enjoying the class, everybody? Yes, you are enjoying the class. You don't even have choice. So, let us go. The next aspect is very, very important. You see, at some point, okay, Jubo, please, you have the floor. Let me unmute everybody. It was Ofoma that made me to mute everybody because she was disturbing us. So, Jubo, please, you have the floor. You have the floor. You raise up your hand. Or do you mean to give us emoji? Or you have a question?
Hello, sir. Can you repeat that continuous audit? I missed out from that.
Okay.
Thank you.
Okay. You can mute your mic. So, continuous audit is very, very simple. It is that type of audit whereby auditor give assurance on particular subject matter. That is, you give your opinion on particular subject matter shortly or immediately after the transaction occur. Let's assume that maybe in the case of e-commerce, whereby if there's any transaction that happens, you already get notification on your end that there's a transaction that happened and the transaction is successful. Then you cannot give assurance that, oh, this transaction is successful, because you get the information, you get uh, the how do I put it? Please, that person, Fatai, please mute your mic, please. I've not called you. It is when I call you, you will mute and you talk. Okay. So what I'm saying in essence is continuous audit. It is that type of audit whereby the auditor or the personal give assurance opinion on that particular subject matter. Subject matter is that particular thing they ask you to come and give assurance services on. You can give opinion on that particular engagement shortly or immediately when the transaction happen or when the what event happen. So how do you give opinion? It's because there is automated procedure software that has been embedded in the client software, whereby if the transaction happen in the client office, you can get notification on your what through their automated procedure that have already been embedded in the client software, so that the transaction was successful. You are getting the notification and you can give opinion immediately whether the transaction is free from material misstatement and it is fairly presented or not. That is what we understand by continuous audit. Jubo, do you understand now? Do you understand now? He has disappeared again. And you
Yes,
ask question, you disappear.
yes, I'm okay. I'm okay.
All right. Okay. All right, sir. So, Fatai, please, you have the floor. Please, let us be fast. This is your question that all of you are now raising hand now. If Jubo did not answer now, you will not ask. Oh, yeah, please, let us hear you. Fatai, please, you have the floor. You have the floor, please. All right. Osadolo from Edo State, you have the floor. Good afternoon or good evening.
Good evening, sir. All right.
All right. Good evening.
Thank you very much. For this continuous audit, can we connect it to auditing of the banking system? Do that apply to auditing of the banking system?
Okay, but it
Like when you
cannot be.
use the banking system as an
No,
example for
no,
this
it cannot be
continuous
banking
audit?
system. I think this continuous audit is mostly appropriate for e-commerce transaction. It is mostly appropriate for e-commerce transaction. It cannot be used for. That is why we bring it immediately after that e-commerce, so that you understand that they can use continuous audit for e-commerce transaction. Instead of now wait till that financial year before you now do the audit of that transaction. As the transaction is happening, you're already getting notification and you are confirming it and you are giving your opinion on that particular transaction as the case may be. Do you understand? So this continuous audit cannot be used for bank operation. That one will be a standard audit on its own. And don't forget, this chapter is on assurance engagement. You are just giving your opinion. You are giving assurance to boost level of confidence of the principal or the shareholder, whether the transaction is free from material misstatements or not. Are you clear now, ma'am?
Yes, sir. Thank you very much.
All right. So, Deborah, lastly, so you can put down your hand now. Deborah, please, you have the floor.
Good evening, sir. Can you hear
Good
me?
evening.
All right, sir.
Yes, I'm with you.
My,
Please go on.
all right. My question is that, for example, now, because according to what I know so far, if there is a big, let's take Nestle as an example now, which is a very, very big firm that
Okay.
produces the goods and service. I don't know, Sha, but I
Okay.
know that auditors for them for companies like them, they don't audit at the end of the year. They would have like hired auditor that would follow them in between as they throughout the year. The auditor will be with them. So my question is that for companies like that, is it that this assurance engagement is particularly for some types of companies? Because for example, now for that next that I said now, if there is an auditor that would be with them from the beginning of the year till the end of the year for them to audit the financial statement, I don't think they need to hire another auditor again to come and give maybe assurance engagement. I don't know if you get my question, sir.
Yes, I do. I think I actually do get your question. So,
All
let
right.
me first of all, do you work in that kind of establishment next to? Because you said from what you know, probably you have first-hand information as to how they do their audit there. First of all, did you work in that particular organization before
No, I
or
do not.
now?
No, I do not.
Sorry?
But from
Okay.
I said no, sir, no, sir.
Okay. Do you have a friend that worked in that kind of establishment or?
Yeah, something like that. Yes.
Okay, so majorly, all those we cannot say the reason why they can be a lengthy, but it cannot be the auditor will be in that office from beginning of the year to the end of the year. It's not possible. So just get that one right. But that particular company might engage the service of either group auditor because they are very, very big. If you remember when we are talking about chapter 10 or joint audit. So I can take my firm for example. I know one of my colleagues that will resume in February together, and their first engagement is auditing one of the one company in Abuja, whereby they just resume back this September. So you now calculate from February to September is how many months? That's about 7 to 8 months because their transaction is big and the company is big. So the auditor that will audit that particular this thing will be about 2 or 3 audit firm. So the reason why they take length month like that was because they're auditing the transaction of last year. So you can all the if definitely they might, but all those people you are seeing, they might be internal auditor that all the practitioners that they engage to come and help them to put some things in place before the main external auditor will now come, so that they will have perfect all their transactions, all their account entries and everything before the main auditor will now come to audit that financial year. But it cannot possible that as the transaction is happening, the auditor is there to audit that particular listing. I hope you understand what I'm saying. So
Yes, I understand. Thank
the
you very
audit
much, sir.
will definitely be for last year accounts. But as I'm happy that you mentioned that next week because they are one of the biggest company in Nigeria. So it will either be joint audit, whereby 2 or more audit firm will be there. And they cannot just be 3 weeks or 1 month audit that we say we'll just do and we will leave there. No. It's going to take number of months before they can start and finish the audit. There's a lot of plan and procedure to put in place when you are doing joint audit or group audit, as the case may be, as we explained 2 classes ago. So you can now understand. So those people, they might be auditors present in the company, but they are either the internal auditor or they are experts that they just engage to help them perfect or put some things together before the main auditor will now come to audit the financial statement. So that before the main auditor will now see a lot of things, they must have cited it by themselves and correct it before the main auditor will come. I hope I've answered your question, Deborah.
Thank you very much, sir. Thank you so much for the clarification.
All right. So, Patrick, you'll be the last person I will answer your question now before uh, we proceed. Oh, yeah, please, fast, fast, fast. The
Okay.
time is going.
Sorry, sir. Sorry, sir. I want to take it back. There's something you said. Say economics means what? Efficiency means and effectiveness means what? When you were
Oh,
explaining it. Amen.
Economy
Right.
means how you are able to manage their resources. That is economy. Efficiency is how you are able to use that the resources to generate more outputs. Then effectiveness has to be with doing the right things, doing the things right to achieve that targeted objective. So if you are your efficiency and effectiveness is working right in hand, efficiency is how you can double something. That is the money, how you can multiply it to bring more profit. While effectiveness is you are doing the right thing. If you are doing the right thing, then it will show in your efficiency because you are going to produce more and your output will increase. So economy means to do to manage the resources of the organization. Efficiency has to do with to the how you can use the resources to give more output. Then effectiveness has to do with doing the right thing at the right time. Do you
Thank you, sir.
understand now, Patrick?
Yes, sir.
All right.
Thank you, Chris. Thank
So
you, sir.
all right. So let us proceed. I said before all of you started bombarding me with questions. Thank God I see no books, no. If not, I forgot. Okay. So forensic accounts at some point people used to understand. Like I can remember at the beginning of this diary, a lot of people in my DM. Why is it that? But there is assurance, there is forensic in the syllabus they released, but your material, there is no forensic there. What is going on? You can see forensic here now. So, but that forensic you see in skills, because those people who doing auditing in skills, they are not the accounting students. And I know for all of us that study accounting and accounting graduates, we must have been auditing when we are in undergraduate. And during they must have taught us forensic. The reason why they are doing it in skills is because those people doing auditing skills, they are not an accounting graduate. They just want to come and enjoy our icon for us. That is why they just say, oh yeah, oh, you have to do auditing. And this forensic, they need to understand it at the beginning there. Yes, they need to understand it at the beginning there. At some point, even tax was not even in skills before. Yes, tax was not in skills before. So it was when I was writing 2021, they now added tax to skills. So, but that is by the way. Let us proceed. So, here we are going to explain the forensic audit, forensic investigation, and forensic accounting. Let's go. What is forensic accounting first? It involves preparation of financial information. What is forensic, first of all, to understand? Forensic. When they say something is forensic, that is, it is application of science and technology to find out some important thing. Application of science and technology to find out important uh, important information about particular or to find out specific area about particular things in our financial statements. Why do we use forensic? Maybe in the aspect of to investigate more about fraud case or any money laundering something. That is where you use forensic. It is deep investigation process whereby you get to know something through application of some sophisticated application to arrive at a point whereby you'll be able to determine whether that thing is true or not. That is forensic. Now, what is now forensic accounting? What is forensic audit? What is forensic investigation? So let us go. It involves preparing financial information for use as evidence by court of law. Some such report may include loss of earnings, divorce settlement, dispute settlement, involving business valuation. That is forensic accounting. However, There are two aspects of forensics. There are forensic investigation and forensic audit. What is now forensic investigation? What is forensic audit? So, if you understand forensic as a whole, you understand everything that has to do with it, then we can now go on with our classes. So, what is forensic investigation? This is a forensic audit carried out. Forensic, I said, don't forget, I said investigation has to do with forensics. That is why they said here that forensic investigation, they said this is a forensic audit carried out in response to a suspicious of wrongdoing. I just explained that now. Usually either to prove or disprove certain assumption. The main objective of forensic investigation is to obtain evidence that may be used in legal proceeding to resolve disputes or prove guilty, innocence in a criminal case that we discussed in chapter 4. Also, forensic investigation are reactive measure. It may also be preventive or proactive measure. Reactive measure is when the thing has happened. It is also preventive or to prevent things not to happen or to prevent something not to happen in the future. That's what we call preventive or proactive. But they said forensic investigation is always reactive. It means when the matter has happened, you are doing forensic investigation to dig deep about that particular thing. Do we understand now? Do we understand now?
Not really, sir.
Okay, in what aspect you don't understand?
Maybe I'm not just getting the forensic concept, investigation concept properly. I don't know.
Okay, but is it the first time you're even hearing about forensic?
That is my first time even doing
Ah,
it.
no, let me see your name there. Johnny Apes. Ah, okay. I think this is your name. I think your name is familiar. I think your name is familiar. But forensic, yeah, you should understand forensic. Oh. Let me break it down so that you understand very well. You see that forensic. Now, it is application of science and technology. Application of science and technology to dig deep of something that has happened, but majorly used in the court of law. If you have been following it before, we used to call something criminal law and civil law in chapter 4. Criminal law is when you do what you what you not supposed to do, you do it and they sue you. And in the court of law, they said they sue you in the court of law. So you can use forensic to dig deep whether that thing actually happened or not. So that by the time you now do forensic about it, you will now be able to know the full picture of it. But it is mostly used in a court case, whereby you do forensic to settle disputes of court case. For example, now maybe if there is okay, you are into production of like your business line of business, maybe you are into decoration of this thing. Maybe let's say painting of the wall. You painted you get the contract to paint a particular building. So after painting, they find out that the paint is started peeling. They just sue you to court. So you now engage the forensic investigator to now help you find out that this thing has never happened before. Could it be that this paint that I got from this company, could it be that the paint is bad? Or what are the material they use to prepare this paint? Because these people have already sued me. So I need to dig deep so that I can present this case in the court of law that this is what caused this paint to be peeling as a result of the bad material that the company where I got the paint from. So the bad material that they use in preparing the paint, that is why the paint is peeling. You know me, I don't know. I just got the paint and I use it to paint the wall. So you engage the service of forensic investigator to dig deep about as to what actually happened that make the painting to be peeling from the wall. Then you present the case in the court, or you present the outcome of your investigation in the court of law to settle what that dispute. That is forensic. Do you understand now, man?
Thank you, sir.
So if you now understand, now then now we can now narrow it down to forensic accounting, forensic investigation, and forensic audit. I've explained the meaning of forensic accounting. That is, so you can now see. So you see, it involves preparing financial information for use as evidence by court of law. So you will help them to prepare financial. Maybe the account has been prepared before, but there is fraud. They now engage you, forensic accountant, to do forensic. That is, you are using your science and technology to prepare that financial statement again, so that you now present it in the court of law as against the one that have been prepared before. Before they can take you to court, it means what you did before was wrong, and the thing has caused damage. Then they now engage the service of forensic accountant to prepare that same procedure again using sophisticated procedure, science and technology procedure, to prepare that financial statement again, so that to now discuss it at the court of law, to serve as evidence as court of law as to what they prepared before and to what you just find out during your forensic investigation, whether it's on the same side or not. Now they now said some such report may include loss of earning when there is loss of money, divorce settlement whereby there is any divorce or the marriage, dispute settlement whereby two people carry themselves to court. They can use forensic accounting to do it, or which involve business valuation. Maybe you want to value your business now. In the case of merger and acquisition, you can engage the service of forensic accountant to help you do business valuation. That is aspect of forensic accounting. Do we understand, everybody? Are we following? Okay, so now, if you understand forensic accounting, what is now forensic investigation? And I said, forensic investigation has to do with aspect of forensic audit. So now, before you can investigate, then it is responsible to carry out in forensic audit. Let's go. This is a forensic audit carried out in respect of suspicious wrongdoing, whereby you notice that there is fraud, or the application, or there is some foul play somewhere. You can do forensic investigation. You are investigating. He said this is a forensic audit carried out in respect to what? To suspicious wrongdoing. Usually either to prove or disprove certain assumption. Maybe the assumption they put in place to prove or to disprove, to prove whether the assumption is right or to disprove whether the assumption is not right. The main objective of forensic investigation is to obtain evidence that might be used in legal proceeding. Legal proceeding there is in court settlement case, to resolve a dispute or prove guilty, whether to prove guilty that someone is guilty or not, which is innocent in a criminal case. Often, forensic investigation are reactive measure. It means that it is that investigation it is that investigation they do after something has happened. But it may also be preventive. Preventive means that to make sure that wrong thing does not happen, or proactive, or to put in place some good measure if at all that thing later happen. But in a major case, forensic investigation happen as a reactive measures when something bad has happened. That is forensic investigation. My dear professional, do we understand? Do we understand? Nobody is giving me emoji again. Are we tired? Here. Do we understand? Yes. Can I proceed? Yes. Because we are still going. Where we are going is still far. You guys are, because I did not plan to even stay at this point by this time. We should have gone far. So, what is now forensic audit? Let's go. They now said it is an element of forensic investigation. It refers to the method and procedure used to obtain audit evidence in forensic investigation. It is process of gathering, analyzing, and reporting on data, much of financial in nature. We said when we are describing forensic investigation, we said it is forensic audit carried out in response to what suspicious wrongdoing. Now, when we now get to forensic audit, we now said it is an element of forensic investigation. It is referred to the method and procedure used to obtain audit evidence in forensic investigation. It is the process of gathering, analyzing, and reporting on data, much of it financial in nature. So, having to understand the aspect of forensic investigation, forensic accounting, and forensic what audit. What are the what ethical principles to forensic investigation? One, integrity must be there, just like the ethical principle that we had before. Objectivity, professional competence and due care, confidentiality, and professional behavior. So, the following are the ethical principles of forensic investigation. One, integrity. That is, a forensic accountant is expected to be what? To be truthful, honest, straightforward, under legal dispute and legal investigation. Objectivity. Forensic accountant is expected not to be biased and should be objective with this person. Now, Stephen, yeah, I will not deal from here and you receive it. Okay. Forensic accountant is expected not to be biased and should be objective when discharging its responsibility. All these things is just normal ethical principle for a for an accountant or an auditor. But when it's related to forensic, when you are saying an accountant, you have to put a forensic uh, uh, as subject matter there. So, professional competence and due care. Accountant here is expected to be sufficiently competent to do the job. So, confidentiality. Forensic accountant is not expected to disclose information without its client consent. That's a normal confidentiality. The exception is when it's requested by court of law. That is where we are permitted to disclose the information of our client to third party by court of law, legal requirement, and what disclose override the rule of client confidentiality. So, having to understand that, what are the next things we need to talk about? Then professional behavior. The forensic accountant is expected to display what? Professional behavior always, especially when called to appear as witness in court of law. He should not act in a way that will bring disrepute to profession which he belongs. So, procedure in forensic investigation. What are the procedure in forensic investigation? So, let us go. I hope you are following everybody. This is not the time for us to be what? To be uh to be slacking. No, we need to be on point. Now, procedure in forensic investigation. Please confirm if you can, if you are following with your emoji, please. Alright. Now, procedure that should be followed in forensic investigation is based on the term and objective of the engagement. Some of the procedure may be followed by the accountant, which include, among others, one, establish the objective of the investigation. Why are we doing the investigation? Is it to uh, investigate on fraud or wrongdoing or business violation or court case settlement or divorce settlement? Everything we need to establish. We need to establish the objective of the investigation. It is when you establish the objective, then you now plan. Plan the investigation with the view of achieving the objective. That is, you have to plan. Since you have already know the objective, then you have to plan the investigation with the view of achieving the objective. Three, gather reasonable, sufficient evidence to achieve objective of the audit. You must be able to gather reasonable, sufficient, and appropriate evidence to achieve the objective of the audit. Four, gather the evidence in a normal audit method. In a normal way, we use to gather audit evidence. Then that is another way you can use to gather forensic investigation. 4 or 5, use the evidence to obtain use the evidence obtained to reach an opinion. The evidence you have obtained, you use it to reach an opinion whether the person actually perpetrate fraud or not, whether there's fraud or not, whether the person is guilty or innocent. You need to use the evidence obtained to reach opinion. And lastly, you have to prepare report for the client based on what? Based on your opinion reached. These are the procedure in forensic investigation. Please, everybody, confirm if we are enjoying the class and the class is going on smoothly. Do we understand everybody? Yes. Can I proceed? Yes. Are we enjoying ourselves? Yes. Okay. So we are moving straight to agency associated with forensic audit. What are the agency, or which agency are mostly used forensic audit or investigation as the case may be? The following are some agencies associated with forensic audit. They are Economic Financial Crime Commission, which is EFCC, Independent Corrupt Practice and Related Offence Commission, Act 2000, that is ICPC. Then Money Laundering Act, if there's money laundering, then they will be subjected to forensic investigation. Federal Inland Revenue Service, maybe in the case of tax evasion, you are not paying your tax very well, they can use forensic investigation to know. Bank and other financial institution, that is Broker Act 1991. If there's anything that relates to bank issue or fraud in the case of fraud, like all those bankers that used to thief money. Well, I was a banker before, so I cannot actually use the whole mouth to say it. So they can use forensic investigation to clear the whole cause about whether the person is guilty or not in the court case, whether there's fraud or not, whether the approach is right or not, whether in a court settlement or the first settlement as the case may be. So these are the major things we need to understand about the meaning of forensic, the aspect of forensic investigation, forensic accounting, forensic audit, then the procedure to follow in forensic investigation. After to understand this, let us now go to another important aspect. Like I said, maybe I can want to be wicked under this chapter. This is where they used to go. Prospective financial information. I've explained before. What is the meaning of prospective? To know something, to cater for something that's happened before, to use past information, past record to what? To project for the future. Prospective. What is this thing likely going to bring later? Prospective financial information. Prospective for future purpose, financial information. That is using future forecast to know whether the financial statement you want to prepare or the information is going to be is going to bring uh, is going to be right or not. That is why we are using prospective financial information. Like I said, you can use it on projection, on forecast, and on information. So let's sit back and enjoy the meaning of prospective financial information and how it relates to auditing and how we are expected to answer it when we see it in the exam. So let us go. Traditionally, the role of auditor has focused on providing assurance on historical events. What is historical? Something that has happened in the past. Now, for example, on financial statement relating to a period in the past. When an auditor examines historical data, there is usually factual evidence to support the reported figures. So I want you to understand what prospective now means, that it has not happened, but we are projecting that what is going to happen in the future with the financial statement you want to prepare. Prospective. But they said traditionally, The role of an auditor is to provide evidence or assurance on historical events, something that's happened before. Abi, if you are auditing a company now, it means that we are auditing their last year accounts, not this current year. So this current year transaction will be audited next year, historically. But for the NASA, for example, on financial statement relating to what to periods period in the what in the past. When auditor now examine the historical data, there is usually virtual evidence. That is, there will be evidence for you to show to corroborate your opinion or the figures reported in the financial statement. However, this evidence often comes from events has that's taking place since the financial statements were produced. For example, receivables may be subsequently been paid. That is, receivable it has happened in the past, but maybe they are still paying. Receivable is people that is owing you. They have been owing you since last year or 3 years ago, but they still keep paying. Maybe they pay some part of it last year, they pay some part of it upper year, they pay part of it this year. They said receivable may subsequently be have been paid. Inventory may be subsequently have been sold, that is, they are selling. They sold last year, they sold upper year, they sold this year. But however, or the now said, oh, okay, inventory may be subsequently being sold, providing evidence that trade receivable are correctly valued in the financial position, and inventory was correctly what also valued. So the evidence is critical to the audit process. However, as a business and economic environment have changed, now when something has now changed, demand has grown from professional accountants to provide assurance on information relating to the future. That is where we are now going to. Stock information is known as prospective financial information. So, if you now want to put it, what if they ask you, they can ask you direct question that what is prospective financial information? You now said prospective financial information can be defined as a process whereby an auditor use projected information to provide what the financial statement or the financial information is going to look like or hold in the future to come. That is, you are using this information now to project what that information or what that financial information is going to look like in the future to come. That is prospective financial information. They now said, read from here. They said, as business and economic environment have changed, demand has now grown for financial accountants to also provide assurance on information relating to the future. That is, you are now giving us assurance on what has happened. You are also giving us an assurance of what is going to happen later with that particular information you have at hand now. You have focused for those of us that used to play bet. That is exactly prospective future focus. That is the game that they will play tomorrow for that used to play sporty. They will know that, oh, let me carry you straight for tomorrow. They are using that information now to project what is going to happen, whether man is going to play win tomorrow or not. That is prospective potential sport better. I'm not sure you understand. I'm using that related information. That is, if something is going to happen tomorrow, you are using information that you have at hand today to project how that this thing is going to look like tomorrow. If you carry me, I used to watch ball very well. Man City, I think Liverpool is playing Crystal Palace tomorrow. You say that Crystal Palace, maybe they will give Liverpool problem, but Liverpool will win. We already stake it 1,000. Oh yeah, Liverpool straight win. You are using that information on a prospect basis for something that is going to happen in the future. Please confirm with your email if you understand this practical example. So we can now relate it to our auditing work now. Prospective financial information. We are using that information we have at hand now to project what is going to happen in the future. And such information is known as prospective financial information. So let us now go. PFI is now widely used both within an entity internally or externally. How can we use it internally? How can we use it externally? Internally, we can use it to forecast, to project. The answer internally, forecast and projection are widely used as a form of management information. Example include forecast and projection relating to PFI. Here, we said we can forecast and project about the revenue that the company is going to generate at the end of our next financial year to come, capital expenditure, revenue expenditure, profit that they are going to make in the future, cash flow, whether there will be a lot of money in circulation, working capital, whether the money they are using to run the business, whether it's going to yield more profits in the future. We can use forecast and projection to uh, uh, know the prospective financial information on the following: on revenue, on the capital expenditure, revenue expenditure, profit, cash flows, and working capital. Please confirm if you are enjoying the class and you are following me. Alright. Now we are now going to external uses. The external uses of prospective financial information. Now, profit for forecast or for providing stock markets, forecast for cash flow to support an application for a loan from a bank, profit forecast to support or defend takeover bid. Takeover is when you want to buy a company, you want to take over. Like for those of us, I know there are some organization, there are some persons that work in the bank here. If especially some bank that are taking over, like Afribank now to UBA. Is it Afribank? Yes, to UBA. Who is that person that is not meeting his mic now? Who is that now? Afar, don't let us fight though. Okay. So, like, okay, I take Afribank, yes, to UBA, like Diamond Bank to Access, that is takeover. For those of us that are working in UBA, do you believe that that logo is not actually UBA? It is logo of Afribank. It is that name that is maintained. That UBA, it is the name that they maintain, but that logo is for the bank they will take over. That is for Afribank, but that is story for another day. So I'm just citing that one as an example. Profit forecast to support or defend takeover bids. Don't forget, I said on PFI, it can be on forecast, on projection, and on information. So the next thing I'm going to be establishing that now is PFI on information. How can we use information to project for prospective financial information, the forecast, and the projection itself? So let us go. Let's see. Okay, now the auditing profession has traditionally been cautious about expressing a firm opinion on financial information relating to future period. However, when audit firm undertakes this type of work, the work on PFI is closely regulated. For example, accountants are required to use very careful wording in their report on PFI. So what's the definition? Like I said before, in other definition, this is another definition. To say financial information is based on assumption that one about events that may occur in the future and possible action by entity. You can put it like that. That prospective financial information is the information that is based on assumption on what is about to happen in the future and the possible action that entity may put in place. So let us go. What is now forecast? Now, this one is just perspective on information. Now, perspective on forecast, then perspective on projection. That's what we want to talk about. We talk about perspective on information. He said, perspective on information, that is PFI on information, is based on assumption on whether about events that may occur in the future and the possible action by an entity. That's on information. Then on forecast. The forecast is PFI prepared on basis assumption that one, future events that management is expected to take place. That is future events that management is expected to take place, and the action of that management expected to take. Action that management is expected to take on that future what expected outcome. The assumption that are usually used by management to prepare forecast are called best estimate assumption. Don't forget, if it is on information, that is, they are using PFI on assumption that that information they are using that information on that some event is going to happen in the future. They are using the information. And what are the possible actions that the organization is going to put in place on that particular PFI for what? For that information. They are using the information that from this information, something might happen in the future. Then, if this thing happen, what is going to be our possible action on that particular information? Now, on our forecast now, it is that assumption that future event is going to happen. Just like that bird I said, that future event is going to happen. What's that future event? Man is going to what? Play tomorrow. So the action to be taken by all those bad people, they are not going to prepare their best sleep. You now see their sleep like tissue like this. Okay, whether man is going to win or not, they will now be picking it. So you have to take Man U 1,000, take Liverpool 2,000 before you know the money has finished. But that's by the way, that's not what we are going to. So they are using that forecast to know what is going to happen tomorrow. Now on projection. Projection is prepared on the basis of hypothetical assumption. What is hypothetical assumption? About future events and management action that are not necessarily expected to take place. There are, when something is hypothetical, it means that it might not necessarily to take place, but you are already made projection for it. If it happen, you have something to cover it. If it does not happen, you have something to cover it. That is why they said on hypothetical assumption about future events and management action that are not necessarily expected to take place, or mix of best estimate and hypothetical assumption. Best estimate that certainly this thing is going to happen, or hypothetical assumption that it might not happen. So you can do PFI on information. If it is on information, it means that certain events will happen in the future, and what is going to be the entity way of responding to it. That's on information. If it is on focus, it means that the future event will happen again to take place, and what are the actions of the management that are expected to take in the case of that future event happen. So don't worry, you will ask a question. I know you will ask. Then the third one, projection, hypothetical assumption, whether the thing is going to happen or not. You have already made projection for it. Then then you can now also do on the best mixed best estimate whether the thing is going to actually happen, or is going to or is not going to happen, which is on hypothetical assumption. So that is that PFI on these three stages: on information, on focus, and on projection. Ahmad, you have the floor. Ahmadu Mohammed, you have the floor. Now or never. You have the floor now, please. He has disappeared. Please, my dear professional, I hope you are enjoying it. Please, can you hear me? The brother is saying that the network is not stable. I hope you can hear me very well. Yes. Can I proceed? Yes.
We can hear you.
So,
We can hear you.
okay. So, let us proceed. I'm sure this is where we are going to end it for today. But let us go. Now, the focus is therefore the best estimate of what is expected to happen. A projection is an estimate of what is likely to happen if certain condition or events will happen. Both are distinguished from target, which is what management want to happen. Don't now forget. Yeah, and I make it very, very simple. That what just like I made efficiency, economy, and effectiveness to be easy, where I just put that short meaning of it. I also put it for projection and forecast here. Yeah, I said focus is therefore best estimate of what is expected to happen. best estimate for what is expected to happen. That is forecast. Projection is an estimate of what is likely to happen if certain condition or event were to happen. So now, forecast is man is playing tomorrow. I'm expecting Man U to win. That is your forecast. Projection is Man U might win, they might not win tomorrow. That is forecast. But you are not planning for that forecast. Oh, instead of me that will just focus that Man is going to win. On projection, so projection is now that Man might win, Man might not win. So if you now want to project, you might project that let me play. For those of us, so that's the reason I'm using this bet is you are actually going to get it right very well. So for that projection, you now say, okay, instead of picking Man U to win straight, Man might go and draw. So let me play 2 tickets. Let me play Man U to win here, or let me play Man U to draw here, or let me play Man U to win here, Man U to lose here. That is your projection. But focus is I'm expecting Man U to win. You just play it straight. Yeah. But projection is Man U might not win. No. So let me just play it safe. Man U to win here. In another sleep, Man U to lose there. Or Man U to win here, Man U to draw there. That is projection. Please, do we understand, everybody? Do we understand? Okay. So
Yes,
now
sir.
let us now go. Let us go. Now, in accordance with, please, if you have a question, sometimes I will not understand your question in this your chat box. Please raise up your hand and ask. Or you are having phobia of asking question in the class. That is why we are here. Let us ask question. Eh? Okay, Celine, you have the floor. You have the floor. Please go on.
Good evening, sir.
Good evening,
Can you hear
ma.
me?
Please go on. I can hear you.
Okay. Please, my confusion is when we say we are auditing a PFI, are we saying that if an auditor comes to audit a
Yeah,
financial
no,
statement?
no, no, don't get it wrong. It's not audit. What do you mean by audit? Hold on. So that you are not getting it wrong from the beginning. You are not auditing PFI. You are using the information to project. Don't forget, we are using assurance engagement here. You are using information to project. They call you that, oh, Ineka, you are an accountant, you are an auditor. Please, we have some information. Come and help us to use this information to project what might happen in the future. So you now see to it that from what I'm seeing, company might likely to make profit from the resources and from the past record. The company might likely to make profit in the future. Or for what I'm seeing, the company might likely to make loss in the future. You are not auditing, no. Don't get it wrong. You are using the
Okay.
information to project what is going to happen in the future, to forecast. Whether you are using that's why I say you can PFI can go on information. You can use the information to know what's going to happen in the future. That's why I explained that event that will happen in the future and the necessary action that the organization is going to take, if it is on information or focus on the assumption and on projection of whether this thing is going to happen or not, on hypothetical this thing. So you have to get this thing right. It is not an audit. Oh. Do you understand now? So I
Thank
not
you.
say it's Mr. Eddie that
Thank you.
says I'm auditor. Do you understand now?
Thank you,
So you
sir.
are
Yes,
just
sir.
they just call you that, oh, please, yeah, we know that you are a practitioner. You see, for us that we are doing using that we are chartered accountant, oh, there's something risk that we used to face every day. They will not want to know whether you don't even know it much like that, or they so far you are an accountant call, you must be able to provide solution. So okay, on what has not happened before, they said come and give us, come and help us to do PFI on it. They just give you the information. This is the information we have now. Pro- Project forecast for us using this information, whether this thing is going to be like this in the next 4 years to come or not. That is why they engage you. So you now use that particular information, and before you can use that, you must be able to read through their past events or what they have been doing for you to now use that current information to now project what is going to happen in the future. That's why they said, mostly they said, please give us 5 years forecast. That is, they present information for you now. That is, in the next 4 years, in the next year, they're expecting that the revenue should have increased with 20%, meaning that the upper year should have increased with 40%. So you have to get the increase in revenue with that 40%. That is in next 2027. 2028, 60%. You have to be able to get 60% increase in the revenue from this current year they give you. That is what they call prospective financial information. Do you understand now? You are not auditing. And to everybody,
Thank you very much.
can we proceed now? So now, in
Please,
accordance
sir,
with
one more. Please, sir.
this woman, I will not do from here. Oh yeah, now go on. Ask your question.
Please, sir.
Because
So
now this is
the
and I
percent.
not even expect that I'm going to stay up to this moment in this class because I've already explained from the beginning. But nevertheless, let's go. That's why we are here. Oh yeah.
Please,
Oh
sir.
yeah now.
The growth percentage. Who determines it? Is it the company or the auditor?
It's you now, it's you. That is why they call you. It's you that will determine it. Maybe you are giving them forecast that this is what, that is what, if the company can do it, they will not engage you, the practitioner. They want you to use your professional judgment and advice to help them do that forecast. It might be certain, it might not be correct, but they just want you to use your professional advice to help them project what is going to happen in next year to come. Do you understand? It is as simple as that, selling. It's not hard. Can I proceed now? Can I proceed now?
God bless you, sir.
Amen. And you too. Okay. So now let us go. In accordance with International Standard on Assurance Engagement 3400, what are the examination of prospective financial information? So let's go. International Standard on Assurance Engagement. The examination of prospective financial information is the main source of regulation in this area. It provides guidelines. That is, if you want to use it, just like to relate to question that Celine asked now. They said this standard now guide us that how are we going to do it? They said the examination of prospective financial information is the main source of regulation in this area. It provides guidance. It gives guidance on the examination of PFI itself and how to report in PFI. Reporting of PFI, it focuses mainly on the numerical information. Numerical information, just like what I said, the standard, the percentage now. The numerical information and numerical forecast or prediction. That is what the standard says in accordance with international standard on assurance engagement. These are the two things we need to do. So, accepting PFI engagement. Can we accept PFI engagement? If we can accept, what are the necessary things we need to put in place? So, let us go. Many of the points relevant to deciding whether to accept any audit or assurance engagement will apply to accepting a PFI assurance engagement. Don't forget, we used to say it that one of the this you need to put in place in chapter 5 of practice where we said acceptance or continuous engagement. This aspect hold that a firm or an individual should take an engagement where he or she have the capacity, competence, and material to accept and finish the engagement. It's still the same thing everywhere. Before you can accept PFI, you have to make sure that, you have the capacity and capability to accept it and finish the job. If the job requires more uh, uh, staff to use, do you have many staff to put in place for the for the engagement? If it requires competence, do you have the experience? Have you done it before? If it requires capability, do you have enough experienced staff to use? That is what we are saying, that before you can accept that engagement, first of all, you see here the availability of resources and staff with necessary expertise. That is everywhere. Anywhere you are seeing acceptance and acceptance of any engagement, it has to be on whether you have the resources and availability, capacity to start the job and finish it. Two, the time scale for completion of the engagement. And three, agreeing a fee for the work with the client. The accountant should also establish with the client the form that the assurance report should take. It is particularly important that the client should understand that in a review of forward-looking information, that is forward-looking, Celine, everybody get it right. DFI is not an audit. It is an engagement. It is an assurance engagement. Review of forward-looking information. Only negative assurance can be provided. Negative assurance means that nothing is going to happen. The decision is free from material misstatement. That is negative assurance. Don't forget, that is unqualified audit reports, as the case may be. So let us go. Let us go. Now, the client should be informed that the audit firm will comply with requirement of International Standard on Assurance Engagement 3400 when reviewing prospective financial information. An engagement letter should be agreed and signed by both parties before work is actually started. So, my dear professional colleague, this is where we are going to stop for today. So, by God's grace, hopefully next week, may God spare our life. We are going to start from uh, internal audit and outsourcing. What do we mean by internal audit and outsourcing? Who is that person now? Who is that person? Who? Who is that person that just on mute? Samuel, what is going on now? Can't we just enjoy this class in peace? Why did you unmute? Okay.
I raised up my hand. I want to ask a question. That's why.
Not called you now. You already on mute and you are disturbing the class. Please don't let us take notes. Okay, so you have the floor now.
All right, sir. Thank you, sir. Thank you very much. Please, I am a little bit confused about audit-related services and assurance services. What is the difference,
There's no difference.
sir?
Audit related services. There's no difference.
There's no difference.
Oh yeah.
Okay.
Yes. Mute your mic. Let me explain. Audit related services. They are those services that other than statutory audit. Statutory audit has to do with auditing, reviewing financial statement, figures to figures in the financial statement. The figure they reported in the financial statement, how did they prepare it? How, what are the policies they use? What are the my things they put together before those figures start? Those are statutory audit. But audit related services, though another audit, another type of audit that does not relate to reviewing figures in the financial statement, can be on investigation, can be on due diligence, can be on review of data, can be on to agree upon procedure, to compile some informations together. Those are audit related services. And other audit related services, is either you are giving an assurance or no assurance is given at all. But on who is this now? Say you see that argument again. But under statutory audit, you are definitely giving an assurance. And the assurance you are giving is that you are giving an opinion on that financial statement. But audit related services, you might give an assurance. If the work they gave to you relate you to give report or to comment on that report you want to give, then you are giving an assurance. And there are some that does not relate you to give an assurance engagement. I'll give an example. Due diligence does not is type of audit related services that does not require assurance. You're only doing your investigation to find out whether the company can do this or not. So it's the company that will decide. Then you are not giving an assurance. You're only doing what the company asks you to do. So if it is review data, you mean that you are giving review data is another example of assurance engagement. So that's why I said they are the same thing. Assurance engagement. Review of data is an assurance engagement. You consider everything we are talking about here. You are giving an assurance. PFI, you are giving an assurance. Forensic accounting, forensic investigation, Forensic audit, as the case may be, you are giving an assurance. Are you following? Statutory audit, you are giving an assurance. Review of data, you are giving an assurance. So it is only agree upon procedure. You are not giving an assurance. You're only there to just do what they ask you to do. It is the company that will decide whether they will do with the information you are able to supply and with the report you are able to give them. It is then that they now use their report for their economy decision. So due diligence, you are not given an assurance. So you need to understand that audit related services, it might result you giving an assurance or not giving an assurance. But anywhere you see assurance engagement, it means that after everything, you'll be the one to decide on what you find out, whether it is true or not. That's why they call assurance. Do you understand, Samuel? That's why they say it is assurance. That is, after you do the work, you conclude there that from my work I review, it is true that this person keep the money. It is true that this person did not keep the money. It is true that the financial statement is free from material misstatement. It is true that financial statement is not true, is not free from material misstatement. It is true that there is fraud actually happen. It is true that fraud does not actually happen. All these things you are giving an assurance on it. So after giving an assurance, it is the company that now know that, oh, from the report that the auditor, from the report that Samuel gave us, it means that, oh, this person actually perpetrated fraud. Do you understand the difference now? So that there's no difference between audit related services. It's only the end product you are looking at. That are you giving an assurance after the work or not? Do you understand now? Samuel, you have disappeared again. Samuel. Okay.
Yes, sir. Yes,
So,
sir. Yes, sir. I'm trying to unmute it. Yes, sir.
okay. I don't wish to entertain more questions because this class I took my time to we spent more than 2 hours in this class. But Chinyere, please let's hear you. Chinyere Chukudi, you have the floor.
Okay, good evening, sir.
Good
Good
evening.
evening, sir. Please, my
Please go
question, can
on.
you hear
Good
me,
evening.
sir?
We can hear
Okay.
you.
My question is,
Go on.
what is the forward-looking information and why is the only negative assurance that can be provided?
Do you understand what they call unqualified audit opinion?
Unqualified.
Mm-hmm.
Yes. Yes, yes.
What is unqualified?
Unqualified audit opinion is where is like the audit opinion is not adverse. Is opposite of adverse audit opinion,
What
where
is unqualified?
there is no material misstatement. The auditor didn't find any
Is the
material
same thing as
misstatement.
negative assurance. Is the same
Okay.
thing as negative assurance. So let
Okay.
me now get your question again. That what is forward looking? Forward looking is the same thing as prospective financial information. Prospective, something that will happen in the future. Forward looking, what you are seeing from afar. Forward looking. Forward looking. What is forward? In front, looking, you are seeing. Perspective, what is going to happen in the future? These are just mere English. Do you
Okay, I
understand now?
think I understand, sir. Yeah, I do.
Okay. So, thank you everybody for staying through the class. And this is where we are going to stop for today. Samuel, do you still have another question? Do you still have another question? Okay,
No,
I
sir. No,
presume
sir.
not. Okay. So this is where we are going to stop for today. And most of you that put question in the chat box that how can we get the material, please reach out to me in my DM on the condition to get the material. So this is where we are going to stop today. Thank you everybody for staying through. And don't forget, I said you can, if in your own interest, you can choose to subscribe to the YouTube channel so that you get information about any other information we tell to, even on maybe next classes or something that I might just feel like I need to share. So, well, if you subscribe, you get the notification and you get chance to see what we are doing again. So, thank you everybody for staying through the class, and I pray to Almighty God to count our efforts. I wish everybody best of luck and including myself too, because I'm a student too. I wish myself best of luck because I can be successful when all of you here pass the paper very well. So that is where I know that all this shouting, even despite the fact that everybody are just hailing me that oh they like my the way I used to explain. But let us see. By the grace of God, the result is going to be awesome. So the material is there for you for your use. Reach out to me for the material. So thank you everybody. And this is where we are going to draw the curtain for today. See you next week and enjoy your weekend. Have a wonderful evening. Bye, everybody.
Bye. Good night,
Thank you,
sir.
sir.
Good
Thank you,
night.
sir. Thank you, sir.
Good day.
Mohammed,
Mohammed. Good
you
day, sir.
too.
You too.
Now good
Have
day.
a good
You
day.
too. Now
You
good
too.
day.
Have a good day.